The world that I envision by 2030 is Bitcoin at tens of millions of dollars, while adoption is still less than 2 to 5%.
Right. Interesting.
Supply and demand. So we're now living in a world where 35% of all of the available supply has left the exchanges since 2020. We have 5 years of consistent data of coins leaving the exchanges. 35% of Bitcoin on exchanges, gone. 85% of Bitcoin on OTC desks, gone. And we also have a completely different realm when it comes to demand. We now have the market being dominated by billionaires, nation states, corporates, pension funds, sovereign wealth funds. So I strongly believe that anybody believing that the data, the 11 years of data between 2009 and 2020 can be extrapolated forwards in a power law chart, or, we're living through diminishing returns because we have 3 arbitrary data points in Bitcoin's 16 years. I think a lot of us are going to be really set up to be surprised by what happens in Bitcoin's next 10 or 15 years. Because I just fundamentally believe we're living through a supply shock. And I think by 2030, about 2028, 2029, we're going to have no Bitcoin on exchanges. And then we're going to find out what is the real price or the real value of Bitcoin. And that is when I think things get really interesting really quickly. Again, who knows? Maybe we got no Bitcoin on exchanges sooner, because right now, 100,000 Bitcoins leaving the exchanges every single month. That's been going on for 6 months in a row now, since November 2024. So who knows? Maybe we get there quicker. But yeah, to answer your question, I do believe we're living through a supply suffocation. And I think the supply suffocation is going to be the trigger to highlight the fact that Bitcoin is an exponential technology. And typically for technologies to go exponential, they have to reach an inflection point, or an inflection point is reached that triggers an escape velocity in the adoption of any new technology. Like, this is just a standard S-curve. Automobiles, smartphones, personal computers, internets, all of these technologies we've adopted go through an S-curve. Bitcoin's going to be the same. And it's just my thesis, the supply suffocation is the inflection point on Bitcoin's adoption curve that's going to send it exponential.
Yeah, it's interesting. So that you see the pricing model following the S-curve also.
Yes. But it's going to be, there's so many differences and caveats
Right.
with Bitcoin.
Yeah, it's interesting that in this cycle, like, so much of the new supply is coming from old wallets, like really, really big holdings, like individual whales that maybe it just got to a point where it's like, I've got so much Bitcoin that I need to diversify into something else, or I want to provide, an estate for the family that is X amount of acres or whatever it might be, right? So it seems to be that they are some very large wallets that are providing the liquidity these days. Because even if you remove that, then I think, like you said, the exchange balances would be drained pretty quickly.
Yeah, well, what's really interesting is it's normally these long-term holders, these big whales, that
Mm-hmm.
mark the tops in every Bitcoin cycle.
Mm-hmm.
So typically long-term holders are the smart money. And when
Right.
Bitcoin gets above an all-time high, we typically have a 6 to 9 month period of long-term holders selling coins on the market, taking profits as Bitcoin hits a new all-time high. That's natural. And what happens is the short-term holders, that is retail, come in and buy the bags and they buy the top. This happens every single cycle. But what's fascinating this cycle is the old whales are selling their coins. So the Bitcoin OGs who believe in all of these cycles of diminishing returns and power law and all of this stuff, a lot of them have been selling aggressively since 70K, but very aggressively at 100K. But what's actually different this cycle, and it is different this time, is that we have an explosion of new whales. So what we're seeing is, instead of the short-term holders and the new entrants into the space being retail morons looking to make a quick buck, is the short-term holders this time is entities like BlackRock, the 130 public companies that hold 900,000 coins today, the expanding balance sheets of nation states and sovereign wealth funds accumulating Bitcoin. So this cycle is interesting because if the idea that long-term holders selling marks the top, Well, that would mean that BlackRock, the public corporates, the billionaires, and all of these nation states adopting Bitcoin are the dumb money. I don't
Yeah.
know if that's true. If I had to guess, I feel like this is just the beginning of this cycle. But that's just my guess.
Yeah, that's really interesting because you do get this sense like that Wall Street is acting a lot like retail in 2017. When Bitcoin eclipsed $1,500 a coin and was making all-time highs, and retail came piling in all the way up to 20,000. You almost get the sense that that's where Wall Street is right now in this cycle.
So I've got a conspiratorial take.
Yeah, let's do it.
So I actually think Wall Street has been preparing for this for about 3 years.
Okay.
I think Wall Street absolutely crapped their pants when Bitcoin rallied from 10K to 60K in 2021. And I do find it really interesting that we had that concerted effort to attack Bitcoin in early 2021.
Mm-hmm.
China banned Bitcoin mining as it was going parabolic. Again, Elon Musk, a couple of months after he puts $1.5 billion of Bitcoin on Tesla's balance sheet and starts accepting it for payment for Teslas, a couple of weeks later, he comes out and he says, yeah, you know what? He didn't say this, but just after China banned Bitcoin mining, he comes out and he says, yeah, Bitcoin's dirty. Bitcoin mining is dirty and wasteful. So I'm also going to stop accepting Bitcoin for payment, but he didn't sell his Bitcoin stash.
Right.
Then we also saw the World Economic Forum start attacking proof of work mining and endorsing Ethereum and proof of stake mining. We also saw
Mm-hmm.
BlackRock start talking about ESG scoring and all of this ESG FUD. And all of this happened as Bitcoin was starting to run away from us and the billionaires.
Right. Interesting.
And I almost feel like that price attack has given these guys enough time to accumulate for the past 3 to 4 years. And I think in their minds, they think that Bitcoin at $90,000, $100,000 is still cheap, because in 2020, it ran from 10K to 65K, and they saw just how quickly it could have gotten away from them if they didn't aggressively attack the price and accumulate as much Bitcoin as possible. Now, the speculative attack there, like that all happened, like the WEF, the ESG, the BlackRock. Let's not forget FTX, very politically connected guy who was actively shorting Bitcoin. Like, we have the phone transcripts of him talking to his head trader, Caroline Ellison, during the FTX collapse. He actively said, every single time Bitcoin gets above $20,000, sell as much as you've got. Sell it all, sell it all, sell it all. Almost as if he was actively suppressing the price. And let's not forget, when FTX went bankrupt, he was supposed to be sitting on 80,000 Bitcoin for his clients. 80,000 coins. Guess how much he was sitting on? 0. So he was naked selling Bitcoin in the background. And again, that's just all fact. Like, that all happened between 2021 and 2022. My speculation is, I'm just putting dots together. I'm saying it's interesting that for the first time in Bitcoin's life, we've seen 2 partial bull runs where we've seen Bitcoin leaving the exchanges. So 2021 and now the beginning here in 2024, 2025. And we saw the first bear market in 2022 with Bitcoin leaving the exchanges. This never happened pre-2020. Never, ever, ever, ever. So I'm just saying there's been a consistent supply suffocation since 2020. All of this attack happened. This is interesting. And then obviously BlackRock comes out, starts endorsing Bitcoin in mid-2023. And we start getting all of the internal papers that BlackRock was writing for its clients in 2022, where BlackRock was saying the optimal allocation to Bitcoin between 2011 and 2021 was 85% Bitcoin. They said you should only have 15% of your money in the trash, such as equity markets and bond markets. This is BlackRock's
Holy
recommendations.
smokes.
Yeah, right. And this is the private papers that were writing in 2022, giving to their clients. So BlackRock's writing these papers for their clients before they launch a Bitcoin ETF in mid-2023. And then we have this whole entire ESG FUD campaign in 2021 and 2022. It just,
Yeah, no, that makes sense. I think those dots, that falls right in line with um, a lot of the things that I've been thinking. And one of the things that kind of clued me into this was that at the Bitcoin conference in Nashville when Trump said, "Congratulations, Bitcoiners." It wasn't like, wow, you guys really figured something out. This is amazing. It was kind of like, you're still here. Congratulations, because we're going to run this thing.
I
That's pretty
never,
interesting.
I never connected that dot. That's fascinating.
Yeah, it was a really interesting choice of language.
The devil is always in the detail.
Yeah, exactly. So with the supply suffocation, and the way you're thinking about this, do you see this now? Like, do you see the 4-year cycle breaking? Do you think it's muted? Do you think it still exists? Where are you at in that uh, thought process?
Yeah, so again, back to that 2021 article I wrote. Again, it's a free article. Anyone can go read it online. I said, no, there in life there is no such thing as a certainty. There is only a probability. And at the time in 2021, everybody was raging about this stock to flow model. I said, no, it's going to break inevitably. In 2021, I said there was a 30% chance it's going to break because Bitcoin is now a macro asset. And what's funny is it broke, but it broke to the downside because the Fed raised interest rates at the fastest rate in history in 2021. So I said, look, there's a 30% chance it's going to break in 2021. This cycle, I think it's higher because the supply suffocation has been going on for longer. All of the fundamental endorsements we've talked about in this podcast, I think has accelerated the timeline. And I think there's like a 50 to 60, maybe 65% chance we break it to the upside this cycle. So that would mean Bitcoin like breaking 250. I think somewhere around 200 is kind of like would be considered a typical cycle. If you look at returns from the bottom to the top, that would kind of validate the diminishing returns theory. If Bitcoin tops somewhere around like 150 to 200. But I think there's a 50 to 65% chance we break that to the upside this cycle. And if we don't do it this cycle, then my probabilities of it happening in the 2028, 2029 cycle would be higher again. If the supply suffocation continues to accelerate, and if we're still seeing a lot of bullish tailwinds, I think the probabilities rise. What I encourage people to really think about is, again, I have no idea where the price of Bitcoin is going in the short or the medium term, and nobody does. Even if they're saying, I have all of this math and science to back up Bitcoin with a power law, and it's gospel. How dare you challenge the word of a PhD? I get really concerned when I hear appeals to authorities. So, yeah, whether it's the power law model or the quantile model, I would just really challenge people to think critically about whether models that have 11 years of faulty data between 2009 and 2020 are going to be accurate at projecting Bitcoin's price into the future when the supply and demand has fundamentally changed. This is my biggest gripe with these models. Money and economics, first principles, it's supply and demand. Why are we using models that have 11 years of faulty and different supply and demand data as to the situation we're living in today? So all I
That's a
would
great
encourage,
point.
yeah, I just encourage people to think critically. And there is nobody who knows where the price of Bitcoin's going. For me, what really scares me, because I don't want to be right. Like, I'm petrified of what happens if I am right. And the world is like, the world that I envision by 2030 is Bitcoin at tens of millions of dollars, while adoption is still less than 2 to 5%. And like, that's been my base case since 2021. I was called a real nutter in 2021 with that. But now it just looks even more likely. And the fact that not many people agree with that, that's what scares me, because financial markets always punishes the mainstream or the normies. Last cycle, it was consensus that we'd go to 288K because of stock to flow. And we topped at 65K and crashed to 16. So the consensus was wrecked, me included. I didn't think we'd top at 65K, no chance. So I think, again, consensus this cycle is we're going to top at 150 or 200. Are we going to break it to the downside again now that Wall Street has its bags packed? I don't know. But again, there are no certainties in the world. There are only probabilities. But for me, the probabilities of Bitcoin melting faces over the next 5 years, they're well rising exponentially by the day.
So you've heard Bitcoin is the new gold rush by now. As world leaders on all sides have endorsed it as the future of money and now you're looking to get started, we'll show you how. It's actually easier than you think. First, go to your nearest Byte Federal ATM and turn your cash to coin. Byte Federal has over 1,200 locations around the country with the highest daily limits. Go to our website, bytefederal.com, to find the nearest ATM to you. Log in to any wallet, then create an account, deposit your US cash, and instantly convert it to Bitcoin. That's it. We are the only US manufacturer and operator in the Bitcoin ATM industry, and our US-based live customer service is second to none. Go on, give it a whirl, and don't get left behind. Click the link below.